Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder and this is BRN AM for Tuesday, September 29th, 2020. And here are our top stories. Chime slides past Robinhood and the European fintech market takes a bit of a hit. Well, joining me now to discuss this and more is Daniel Klein. He's Senior Technology and Consumer Products Reporter with The Motley Fool. Dan, thanks so much for joining us on the program this morning.
Thanks for having me.
It's always a pleasure chatting with you. So we have talked a lot on this network with you, with Devin Banerjee and others about Robinhood. And Robinhood, by all accounts, has had tremendous success. And we actually warned some users about where they get financial advice, et cetera. And, Robinhood's not doing anything nefarious. But we've actually seen Robinhood become eclipsed by Chime in terms of its valuation and fundraising efforts. I wanted to get your thoughts on this. Why don't you weigh in?
Yeah, I have to be honest, Jeff. The first I've ever thought of Chime is when you sent me that story. So I learned about Chime 2 days ago. But what Chime is doing is something that's really valuable, in my opinion. It's basically upending the banking industry. Now, I'm not a believer that that people have always gone to banks, that we're all of a sudden going to move to this pure digital. We don't need a bank. Everything can be online. But there's an entire generation of people that aren't used to going to banks. There's also people who have cell phones, have smartphones, but they're underbanked. There aren't banks in their community. It's not easy for them to walk into a Wells Fargo or a Chase or whatever it is and do their banking. So what Chime is doing, it's offering those services in a pure digital way, and it's reaching new people. And I think that's really, really important. Now, for you and I, that might be secondary. We might get a Chime account as a way to do certain digital transactions. But for, maybe my son who's 16 or people who are not necessarily in the current banking system, this is going to give them options, and that's really, really good.
Dan, as I mentioned in the introduction, we've talked a lot about Robinhood, and they've clearly grown significantly. This growth of Chime and the valuation, to me, signifies what you're talking about, which is this audience going more towards digital. And even those of us who are more mature are going to more contactless payments. So, I think it's going to be neck and neck for the foreseeable future between organizations like a Robinhood and Chime kind of going neck and neck in terms of attracting funding, venture capital, and other customers.
Yeah, I like Chime a little bit better because it's built on things that are stable, bank accounts and saving. And whereas Robinhood, look, I want to see trading democratized. I want everyone to have access to the stock market. We always use the stock market as like a barometer of whether the economy is healthy.
Yep.
Here's the reality. It's only like 12% of Americans who own individual stocks. It's about 50% who have exposure to the market through 401ks and other things like that. So there are wide swatches of America that their wealth doesn't go up when the stock market goes up. It's really an upper middle class and wealthy thing that should be available to people with more modest means. So let's say you have a Robinhood account. Here's the possible good of it. You take $25 each week and you move it into your Robinhood account. That sounds small, but hey, that's $1,200 a year. Well, if you put $1,200 a year into something from the point you're 22 to the point you're 65, I can't quite do the math, but it's a very significant. That might even be a 7-figure sum, assuming you're making good choices and going into the into growth stocks and things that beat that 9% per year average that the market goes up. That's something everyone should do. Here's what people shouldn't be doing. They shouldn't be trading options. They shouldn't be buying margin. There's a lot of things Robinhood makes really easy that shouldn't be really easy. At Motley Fool, we say, we don't care how much you read, don't buy options until you've been in the market for a year. I personally say, don't buy options. It isn't worth it. There's too many good companies. Look, it's not sexy, but if you buy shares of Microsoft or Costco or lots of other good companies, even like T-Mobile, not the sexiest company in the world, they're going to slowly go up and you're going to make money. There's no reason to get super sophisticated. Trading on margin is borrowing money in order to trade. If the stock goes down, you lose money. You have to send them money. That's the risky part of Robinhood. That's why I like Chime a little bit better, because Chime is just based on your everyday finances, all the things you do. And hopefully it brings banking to people who otherwise didn't have it. And yeah, for people like you and I, maybe right now we don't want to go into the bank. Nobody is looking to go to the bank and get like a roll of quarters so they can go to the arcade. We don't want to touch stuff. And I don't think that's going to be forever, but I do think we're getting more comfortable with contactless payment. I know I haven't used money or a credit card in a Whole Foods since Amazon bought them. It's all done on my phone. Made a little more difficult by the fact that facial recognition doesn't work when you're wearing a mask.
Now, Dan, the other reason I think you would like Chime as opposed to Robinhood is number one, phones. Most people have phones. Even those of us who are not as well off have some level of access to phones. And we were talking, I think it was last week or the prior week, about Amazon focusing on its pay service in India, where they have phones. So it seems to me that this is a much better play, and we're not here to offer stock buying advice, but it seems like in terms of adding accounts, as you just indicated, there's more opportunity to add people who do not have bank accounts. They can bank online through Chime. It just seems like a better play to me.
Yeah, here's the good news. You can't buy stock in Chime, so it doesn't matter how we feel about it. They're a private company. That being said, the US is in kind of the wild, wild west phase of this. Like what payments we're going to accept, like Apple Pay, Samsung Pay, they have a little bit of a lead, but you're starting to see things like Shopify be more widely accepted. If you're checking out on a lot of websites, Facebook offers like 30 or 40 different methods of payment. Now, if you're an investor and you're buying stocks, I warn you that just because company X, Big Commerce, which is a Shopify alternative, announced Facebook is now accepting Big Commerce, and everyone, oh my God, are they the next Shopify? Should I buy this? They're one of 35 or something like that, different payment methods. It's not a big deal. So be really careful with news like that. But that being said, 3 years ago, Jeff, did you ever conceive that you'd be able to use your smartphone to buy something at a vending machine? Now, that's actually common in Europe and Asia. It hasn't been that common here, but it's coming. And the pandemic has accelerated that.
Yeah, clearly. I mean, people don't, as you said, people don't want to touch money. They want to touch each other. They don't want to touch themselves. So, this is clearly the future of a lot of things. And I get, when you talk about the thing that it boils down to me is about democratization and giving access to banking. And people need to have the ability to put some money away, earn a little bit of interest. Clearly, banks aren't paying a lot of interest right now with rates being so low, but this is an opportunity to do that. And it fits in nicely with a financial literacy, financial wellness strategy here that many people are talking about. Big companies are talking about it. State treasurers are talking about it. Foundations and not-for-profits are talking about it. So I think this fits in really nicely with that theme.
Yeah, it's putting tools into people's hands that previously had only been available to wealthier people. So, you might be making a modest amount of money, but if you can take even a tiny amount, let's say you're taking $10 a week of your paycheck and putting it into a savings account, and then when it hits a certain amount, you're transferring that into even just an exchange traded fund or an index. You're saving, you're investing for the future, and we know it's beyond a doubt beneficial to do that. So even if all that becomes is your emergency fund, well, how many Americans are one paycheck away from disaster? If they can save up over 5 years, 6 months of reserves, well, that's going to keep them in their home. That's going to protect them when they have a medical disaster. It's going to stop them from having to put things on credit cards at 20% interest or, whatever the number is. So we need to be teaching these behaviors at all levels of the economy, and your smartphone hopefully can be the catalyst for that. And look, we have a lot of education in this area at Fool.com, but there's so much more that can be done. We just completed something called Fool School. We did for 2 weeks lessons that we're going to give out to schools and to anyone who wants to learn it on, everything from trading stocks to, not trading, that's not a term we use, investing in stocks, to basic financial literacy, and that's something that needs to be a thing, and that can be delivered through your smartphone. It can be tied into a Chime, and more people are going to have access to better things. Look, if you can get, and it's a weird example, we talked about this a few weeks ago, if you can get a lower cost payday loan through Square to help you get through, that's still not good, but it's better than getting a terribly expensive payday loan through the traditional lenders. So we're making baby steps, but we're seeing real progress. And because of the level of competition, you're going to see lower and lower fees. When you have Chime offering bank accounts. You know who else offers bank accounts? T-Mobile. If you're a T-Mobile customer, you can get a bank account. It pays a decent interest rate. When I say decent, we all know interest rates are terrible. So it pays 0.5% or whatever it is, but that's still better than most. We're putting the things you need to be a functional person to get ahead in the hands of people who traditionally haven't had those. Now the next step is we have to teach them how to use them. We have to make that available, but we're getting there. And I think that's really encouraging. So in some ways, I like what Robinhood does, but there's a danger to it. But I really, really like what Chime is doing.
Yeah, absolutely, Dan. Well, we're going to take a quick break. When we come back, we're going to talk about European fintech. It seems to be a little bit on the slide relative to its peers. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
The windows on our homes, they protect us and the ones we love, but they do much more. At Renewal by Andersen, making your home more comfortable is at the center of every window we make. It's why we custom build our windows in America and install them in as little as 1 day. It's why we build our frames with exclusive Fibrex composite material that's 2 times stronger than vinyl. It's why our glass helps keep your home warmer in winter, cooler in summer, and quieter all year long. It's why we stand behind every window with a 20-year limited warranty. Why not help lower your energy costs while giving your home and family the best? Call 1-800-835-6525 to schedule a free in-home consultation. Buy one, get one at 40% off with this special offer. Plus, get special financing with no money down, no monthly payments, and no interest for 1 full year. Renewal by Andersen, the better way to a better window. Call 1-800-835-6525 now.
Welcome back. We're talking to Daniel Klein of The Motley Fool. Dan, thanks so much for staying with us this morning.
Thanks for keeping me.
So Dan, we're going to shift talking about American fintech, and let's talk about European fintech, but because it's in a bit of a slide lately, you look at some of the peers around the world, China, the US, it's definitely on the decline. I want to get your thoughts about this.
Well, first of all, Jeff, I'm not happy that you rejected my funding request to extensively travel around Europe to be able to look into this personally, but I'll have to make do with what I know. So here's how I see it. The US fintech market is booming. The Asian fintech market is booming. The South American fintech market, specifically with Mercado Libre, is booming. Europe right now is just sort of, they haven't figured it out. They don't have any of the leaders. And I think they're hitting upon sort of, they're a little bit ahead of us in terms of the pandemic. And funding is just kind of dried up. I don't think this is a long-term thing. I think this is well, why are we funding this when we could just use these US services or these Asian services or the, so I don't think this is really like a sign that like a fintech market is dying. The fintech market is booming elsewhere. I think right now Europe's in a bit of a pause where people are like, oh my God, we have a second wave of the virus. It isn't a second wave. It's really just the first wave never went away. But you're seeing closures, so I think it's more a subject of the whole economy is going back to a little bit of a pause. And there isn't that sort of unified response you can get in, how China mitigates it. And the US certainly has not done a good job in the last few months with stimulus and having a unified response. But I do think there is a stock market or an investor optimism that if things get worse, that the government will step in and hand out money and pump money into the system. And I think right now in Europe, that's just not happening. And you're also adding that to the Brexit on top of it, where there's just a lot of uncertainty about what business in Europe is going to look like. So I think this is just kind of a temporary lull.
Well, I was going to ask you about the regulatory frameworks, clearly different in the European Union to the UK to here in the US. I mean, how much does that play into some of this as well? I was talking with someone the other day about ESG, and in a lot of ways, Europe is ahead of the US in ESG because of the regulatory framework. But it almost seems like it could be the opposite here. And I know you mentioned the pandemic. Clearly, that's a big factor on the economy. But I'm wondering about the regulatory framework and whether or not that actually will facilitate growth in these very important areas. Fintech's very important, Dan.
Yeah, and I can't speak all that directly to the regulatory framework. That being said, these things tend to happen in fits and starts. Like remember in the US when something like Apple Pay first came out and we thought it was going to be everywhere and then it just wasn't. Or Amazon, they introduced Amazon Pay and we thought, oh my God, this will be the thing, and that's not even a thing anymore. So it just takes things to like kind of hit the zeitgeist to become something that people demand. And right now it might just be that like European startups are having trouble getting traction, and then eventually something will. There are some areas where Europe is very far behind us. It sounds like a silly one, but European brokerages are still charging fees, which US brokerages generally do not charge a fee for a stock trade. You can't buy fractional shares. That's really important. So if you're a small-time investor who's putting, say, $50 a week into the market, in the US, you can buy a little piece of Amazon. So Amazon's trading for $3,200 a share. If you buy a little piece for $50 and Amazon doubles, well, your investment has doubled. It doesn't matter what percentage you own. In Europe, you can't do that, which means the investor either has to just keep his money in his account until it grows to that amount where you can buy a share, or more likely, you end up buying a share of a company that's not as good. That generally share price is relative to quality of the company. So you could buy 1,000 shares of JCPenney or 1 share of Amazon. You'd rather buy a fractional share of Amazon than buy a lot of JCPenney. So I think you're just seeing some static in the market in Europe, and I think that will change. Just right now, if you're looking at fintech to be excited about, it's really Asia. There's this battle between C Limited and Alibaba and Tencent, and there's all these new emerging technologies, and they're really fighting. And you're not seeing that in Europe right now. In the US, you've got your PayPal, you've got your Square, you've got Amazon, you've got Apple, you've got all these giant companies doing battle, and Europe seems to be left out of that. I don't expect that to continue.
Yeah, as you were listing off some of those names, and saying that, I couldn't even think of a European fintech. Can you? I can't really think of one. And you're covering this stuff on a regular basis. I know you mostly look here in the U.S., but I can't name one that even in the last couple of years that would even, one that is even very popular.
No, I mean, the answer is it's the same companies I just listed for the US. It's Amazon, it's Google, and there's definitely more regulatory concern in Europe about those companies. Facebook, is another one that faces correctly more regulatory concern in Europe than it does in the US. And I actually think it's probably better to solve those problems before things become widespread than sort of the US method of like, let's wait until this is a giant problem and then talk about it. I wouldn't worry about the market in Europe, but it does seem like we don't have as much innovation coming out of Europe. And that might just be because Europe and the United States have kind of become one market in certain areas. So I'm not sure there can't be a Facebook rival in the European Union because Facebook is in the European Union. Whereas China is a closed market. There's no Google in China. So there's an awful lot of opportunity for other companies to go in there.
Yeah, well, I just think it's absolutely fascinating, and you're absolutely right. I mean, we'll have to see how things evolve. Well, Dan, pleasure chatting with you as always. Enjoy the rest of your week, and we'll talk to you again very soon.
Jeff, I'll talk to you next week.
Well, that wraps up this episode of BRN AM. Have a topic of interest or someone you think we should talk to? Drop us a line, and don't forget, for all the news in retirement markets, technology, personal finance, so much more each and every day, check out our daily newsletter, The Morning Pulse. So until tomorrow, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.